All right, some of you told me that you don't know how to set up your own trade, so I will show you how exactly to do that in this short video. Now, first, we need an exchange that has futures contracts, yeah? So you're not trading in the spot market, you're trading in the futures market, so derivatives market. Now, the exchange that we are going to be using in this tutorial will be bingx. I will leave the link to that exchange in the description and pinned in the comments. So you may use the link below. Now, you can actually use bingx from anywhere, America, Europe, anywhere. You don't really need, they don't do KYC. So that's why I chose bingx for this tutorial. Now, here is bingx here, and this is the spot section. So you will have to click somewhere down here. You click and hold that, and you will see futures. So when you click on that futures, it will come like so. You can open longs right here or open short positions right here. Now, the good thing about this longing and shorting is you can take advantage of very little price moves. So a 1% price move, which in the spot market would basically mean nothing except you're using a lot of money, in the futures markets can mean 20 to 30% and even more gains on your trade. So depending on the leverage that you are using, a very little move in price can result in some crazy gains for you, and it can actually mean some big losses too. So it is both ways. It's not just one way. You can win a lot and you can lose a lot as well. Up here, you can actually see the leverage. So the green 20 right here, that's 20x leverage, and this is also 20x leverage. This is for short positions and this is for long positions. So if you see a signal in the group and the call is 20x long, you have to change this to 20 if it is not already 20 right here. Here you will see isolated margin. Some signals may be isolated and some may be cross. Isolated means that the gain or loss will only be on the particular margin that you have set for that trade. So if you put $100 in a trade, the maximum that you can lose if you did not put any stop loss will only be $100. That is for isolated. So isolated means that it is isolating the margin that you are using for any trade, or say capital you are using for any trade, from your entire stack. So it will not affect the rest of your balance. So that's for isolated. Cross, on the other hand, means that it can affect the rest of your stack if you are not using a stop loss. Now, the big difference here is that some signals may actually need a very wide stop loss, and perhaps you still want to use, say, a high leverage. With that, you will need to be on cross margin. That guarantees that you have the collateral for the position that you are trading. So understand the difference between isolated and cross. If your stop loss is wide and you're using high leverage, you will most likely have to be on cross. Anyway, this will be signaled in the group in cases like these. So let's say you wanted to go long on Bitcoin, you'll have to put the entry price right here. This limit right here means that you want to enter, say, at a lower price than it is now, yeah? So if you wanted to go long at, say, 44,000, you'd have to put a limit order. So you are putting an order that will trigger when price comes down to exactly 44,000, not 44,200. But for a market order, it means that you are entering at this exact price. So you'd have to click on this limit right here and you will see these, where you will change that to market. It means that your order will be triggered at the market, at current market price, yeah? So when you see a signal showing that you should long whatever asset at market, it means that this right here should be market, not limit. When changed to market, you will see it like so. At this point, we have USDT here. So you put the cost that you are basically using for that trade. So let's say you wanted to use $100 on this trade, you are going to put 100 right here. Now, this particular figure will strongly depend on your own risk management. Normally, per trade, you should only want to lose 1% of your entire account. So we have, say, roughly $1,000 here, yes? Which means if I go into any trade, the maximum that I should want to lose, the maximum loss should be 1% of $1,000. Now, 1% of $1,000 is $10. So the maximum loss per trade should be $10 as per this particular account. So if you entered a trade with the potential of losing 50% on that trade with this risk management metric, it means that the maximum you should be using here is $20, because 50% will be $10, which is 1% of your entire stack. You can, of course, choose to use more, but this is just the basic risk management. If you go more than this, you are risking more. So it's really up to you, but that's the best way to manage your risk. If you can risk lower than that, it's even better. But that's like the best way to manage your risk. Maximum 1% loss of your entire stack per trade. Now, when you have put in your cost, you then come here to your take profit and the stop loss. So you see this TP and SL here, yes? TP is the take profit, this one. SL is the stop loss, this one right here. So you key in the take profit and the stop loss. Mostly in our trades, you will see various take profits and one stop loss, of course. So you put the last take profit right here and the stop loss right here. We will come to how you can put the various take profits. So that is all done. You open long right here. Now, of course, when you sign up to bingx, you will not instantly have money here. So you click on this particular button right here. This is how you will transfer money from your spot account to your futures account. When you click on that, you will see this right here where you can transfer fiat or say USDT from your spot account to your futures account. If you do not have say any USDT on bingx, then you can send from any other exchange into this exchange, and then you come here and click on transfer, this icon that you see here. That way you can transfer from your spot account to your futures account, then you can start trading. With all of that done, your trade should be up and running. Now, as you open your trade, it will actually be below. I just pulled this up so that you can see what we're doing here. The margin right here is showing $3 because this is an exemplary trade I actually used. I think that was 4. But the idea is that if you use $20, you will see 20 right here, or say 19 point something as margin. If you use $100, $1,000, that will be the margin right here. Your P&L ratio, how much percentage gain you are making in that trade, will be shown here, and how much money or how much USDT you are actually gaining will be shown here. As said earlier, we would have, say, more than one take profit. So take profit 1, take profit 2, take profit 3, and so on and so forth. To add more take profits, remember from before we only put the last take profit, yeah? So to add more take profits, you come down to here, TPSL. If you click on that, it will bring you to this page right here. You see that our average open price is 44,124, yeah? So if we, and our estimated liquidation price is 41,939. So if our stop loss is lower than this, then we will be liquidated before we even get to our stop loss. Now, to add more take profits, remember that we were longing from here, from this 44,124, and our take profit is at 45,000. Now, let's just say we want to take profit at say 44.3, 44.5, 44.8 before eventually going to 45. Yeah, you will come and you put that take profit here. So take profit 1 you will put here, and then how much you want to realize from that first take profit. Let's say you want to collect 50% of the trade at first take profit, you will put that here. You will pull this to 50% right here. You will also add your stop loss. You can use the same stop loss that you are using for the entire trade. So each of them, particularly on bingx, you have to put the stop loss, the same stop loss right here. So it's like adding different setups, and when price reaches any of those take profits, it will trigger and take you out. After you have all of that set up, you click on OK down here. It will add these other take profits. And that's basically it, people. That's how you set up the trades, and that's how, your entries and stop losses and, take profits get triggered. That's basically the setting of it. If you have any more questions, let me know in the group. I will leave the link to my bingx, the link to bingx down in the description of this video, or I will have it in the pinned comment as well. Let me know if you have any more questions, and see you in the group.